Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for September 22nd, 2019. Before we get started, yes, I said we, and yes, I have a special treat for you today. But before we get started with the analysis, I just want to mention that we have kicked off our new seasonal offer. If you haven't taken advantage of it, make sure you do so. This is the time to do it. The offer is you buy 1 month, you get 2. So you buy 1 month, get 1 free. Or you can do a semi-annual plan and get 25% off, or an annual plan and get 35% off. It's an amazing deal, and it's a deal that we only do a couple of times a year. So make sure you take advantage of it. It does expire September 30th. Once you download once you start with ForexAnalytix and you join the family, make sure you download the mobile app. All right, because this way you can have all of our analysis right at the palm of your hands, no matter where you're at and if you're on the go. Now, today we have Grega Horvat, who is our in-house Elliott Wave analyst. So if you're using ForexAnalytix and you're looking at all of our bias lights here, and you look at the Elliott Wave light, the EW light, and you get the analysis here. This is from Grega Horvat. He's going to be doing the week ahead video for you this week, so you guys are in luck. You guys get to see part of what you're going to be able to get with the ForexAnalytix platform. So without further ado, I want to introduce and welcome Grega Horvat. But also, I want to say make sure you take advantage of ForexAnalytix. And we look forward to having you part of the ForexAnalytix family. Enjoy.
Hello traders, hello everyone. It's been a while since I recorded a week ahead video. Blake is off for this weekend, so before we dig into the markets, just let me remind you that we have new season offer 2 for 1 on a monthly plan. Then you have a 25% off on a 6-month plan and a 35% off on annual plan. So if you like Elliott Wave analysis, harmonics, basic technical analysis and macro stuff, make sure to check this out. Okay, now let's dig it into the markets. Now on euro dollar, as you know, it has been a very unclear situation for the last year or so. So always when you have an unclear situation, what will you do? You will actually step back and look what is going on a higher time frame chart, because it's obvious if on a smaller time frame chart the price action is not clear, you want to remind yourself what is really going on a longer term on the longer scale. If on the other hand you still want to participate in one market that is not maybe clear on a higher time frame but is volatile on a smaller time frame, then maybe you will track this market from an Elliott Wave perspective on a smaller time frame. Okay, so it's very important that you can actually that you have ability to navigate the markets between different time frames. So actually on euro dollar, still the important for me is this trend on a monthly. It's bearish. We have lower lows and lower swing highs, so we expect more downside. Potentially this is a wedge building that may see still a new low, maybe even parity in the upcoming months and years. So looking at the daily chart, what is really going on here, and why I said that it's unclear situation for the last year or so, is because of this price action. I know that the market is declining, but look at this. It's a very unclear situation. Always when we reach a new high, market recovered. Reached a new high, a new low, market recovered. So in my opinion, this is unclear situation, but it's telling me something, that market is slow, much slower compared to the previous drop here in the middle of 2018. So I'm thinking that this is actually late stages of this 5-wave decline, and that we will see sooner or later a bounce into wave B. Of course, calling a bounce into wave B from here, I mean, could be a really not an easy job actually, because you don't see a breakout yet. Okay, I was trying to call this bottom for a few times, but always just found myself on the wrong side. So I really have to respect what the market is doing, and as long as we are below this trend line, I think that it would be too soon to say that we are already building a stage where we could see price climbing higher into wave B. So for now, I mean, even retest of the lows can be possible. Now, if we go on cable, I mean, on cable we have a little bit clearer situation. On weekly or monthly chart, you have definitely a downtrend in progress, and this should stay in place as long as we are trading below the trend line connected from those two swing highs. So I'm thinking about more weakness here into wave 5 to complete wave C from here, from 2014 highs, and to send us down into this fib zone. However, corrections will always occur on the way up, and it looks like the new correction is already here. Why? Because market broke above this downtrend channel. So ideally this sequence from 2019 highs to recent lows is finished, which means if this is really completed, you are now in a new stage of a free wave rise. Now this free wave rise could actually reach this upper trend line. Okay, this trend line could actually, if I would adjust the wave count a little bit, which is always necessary with Elliott wave, you have to be more open-minded, then this could actually be some kind of an ending diagonal in progress as well. But still, I'm thinking that this free wave rise could be in the cards for this higher trend line to be retested. Actually, this trend line comes in right at this wave 4 of this 2 lower degrees. So I'm thinking about a very interesting zone right there, which means that cable could actually climb higher. However, if we are in a corrective rise, it should be made by 3 waves. So looking at the 4-hour chart, this is still only first leg made by 5 waves. So I'm expecting now a pullback. Now, when you have an extended wave 1 of this 5-wave movement, what you would expect is actually that price will retrace back to the termination point of wave 2 and not to the termination point of wave 4. Normally, as you know, if you have a normal sequence where wave 3 will be extended and longer compared to wave 5 and wave 1, then obviously you would expect price to retrace back to the wave 4. But when you have an extended first leg and very sharp, not wave 3, then you can expect pullback to be a little bit lower. So I'm looking for this ABC decline to happen, especially if we will successfully break this trend line in the start of next week. Then we may see this wave B unfolding. Okay. Now we can also take a look at Euro Pound, since we covered those two pairs. Now Euro Pound, I've been looking for this wave B for a while. Okay, I'm tracking it for the last few years, and firstly I thought it's a triangle. Now it's going to be more complex. Then I thought that we will see another push higher for this wave C of B, and then reversal lower from this upper parallel trend line. But it looks like that this, because of Brexit or hopes on Brexit, we can see that cable is actually trying to come up, Euro Pound is coming down. So always when you have one market that is very in very bad situation, okay, or stock that is falling very dramatically, investors will wait on any just small positive news and will try to pull something positive, some optimism out from that news. And of course this will or can impact price very quickly, because they will be looking for reasons why any stock, or in our case pound, would buy. Okay, so obviously if there are just small hopes that there is something new around something new and positive around Brexit, of course buyers will look to buy this pound, because obviously the price was very attractive at the lower levels. So for me it's not a surprise to see this aggressive reversal lower, especially if this some even better news will come out for pound. I think that this wave C could easily drive us even lower and retest this wave A swing support to complete this whole free wave movement or corrective decline down from 2016 highs, which is actually still underway. So on a daily chart, what is really important and why I think that we are reversing here, firstly because we've broken this trend line, secondly we also broken this wave for support. If this would be just another corrective pullback, I would expect a bounce from this wave 4. Obviously we fell through it, in fact we retested it and now again fell to new lows. So I'm thinking that even more weakness will occur after any pullback. Now let's take a look on Aussie. Now Aussie is pretty interesting. I mean, on the monthly chart, still a very clear situation. It's in downtrend, and market always moved quite nicely to the downside since 2011 after a completion of a correction. So actually this downtrend from that completed correction is still underway, especially if we also consider this long-term trend line support has been taken out. So I'm looking at more weakness here. However, I thought that market will make some higher degree wave to pullback here within wave 5 that is in play, but that's not the case yet. It looks like that we are going to see retest of the lows, and the reason is because this bounce from the recent lows was only in 3 waves. Okay, so I'm thinking that this wave B that I'm tracking as part of an irregular correction is still underway, and looks like that market want to retest and maybe clear some stops below this level from start of the year. Yes, if that's the case, then WXY is probably the best interpretation here for this wave B, and where this Y can be actually an ending diagonal. Okay, so watch out for a spike to a new low to clear some stops, and then be aware of a bounce. Also, it's very important to keep an eye on correlated market. Now, Hang Seng Index here, for example, still obviously in downtrend. Bounce was in 3 waves. Upside was limited at this upper trend line and at this gap as well. Okay, and now after this gap was filled, market is turning lower, which is sending this Aussie to the downside as well. Now I also see gold in at least short-term bearish phase, and looks like that even gold, if we'll see lower prices, could impact Aussie as well. But before we go to gold, let's cover something else first. We have Dollar-CAD here. Now Dollar-CAD still in uptrend in my opinion, okay, because we are holding this 2011 trend line support, so expecting more upside. In fact, this trend could actually revisit these all-time highs here. Not all-time highs, I believe. Anyway, these highs here. Why? Because market made this only 3 wave of retracement in this deep wave 4. Okay, so I'm thinking that if wave 5 is underway, if this was correction should be fully retraced. What I really like about Dollar-CAD in this trend line is actually that bounce occurred after 3 wave of a setback on a smaller time frame. So looking at this daily chart, this is the 3 wave setback, okay, and that somewhere there would be that trend line. So we are now reversing higher, and looks like this was quite aggressive impulsive move, so I'm expecting even more gains here. Okay, looking at the 4-hour chart, maybe that was a flat correction, 5 waves up for wave 1, and looks like another flat correction. So it appears that this market likes to form different flat formations on different time frames. Okay, so I'm expecting definitely more upside on Dollar-CAD as long as we are doing above this low from September. Also, what I like about Dollar-CAD is that despite 10%, maybe 15% move up on crude oil after a recent event and the tax, in my opinion, if 15% bounce on crude oil didn't send Dollar-CAD to the downside, then obviously Dollar-CAD or traders will remain on the bullish side of Dollar-CAD. And once the crude oil will going to fill that gap, which is still open at lower prices, I think the Dollar-CAD could in the meantime easily reach higher levels here. So looking at crude oil, since we already mentioned it, you can see here that actually I'm still tracking this wave B triangle, okay, that is part of a downtrend, but this triangle is still incomplete. It's a wave A, B, C, D, now wave D actually, wave E still to come. So this volatility and uncertainty on global scale around crude oil and everything actually may leave these crude oil prices unstable and very volatile, which is perfectly fits actually into a triangle formation. And looking at the weekly chart, this triangle, as I said, is actually is wave B, that is actually part of this wave 5 that could still reach lower prices, even retest this 2016 lows, because this bounce was in 3 waves, and you know this is a correction. Looking at the 4-hour, here on the right, what is really interesting here, that gap, as I said, is still open. This was quite a nice aggressive decline to the downside. We haven't seen a lot of buyers at the end of the week, so it looks like the traders are on the short side. Watch out for maybe for a pullback up towards 60, maybe 61, and then maybe we go down to fill this gap finally and make this wave D. But once the gap is filled, again, market will slow down. Probably we will see those unfilled orders that are placed in these levels will be executed, and obviously market would actually change in its direction and flows. That's why gaps are usually reversal points. Now looking at the next market, which will be dollar Swiss. Dollar Swiss was pretty interesting. Firstly, the weekly chart, very unclear situation, but the best scenario when you have unclear situation, it's just to track and observe potential corrective patterns, flat triangles, double zigzag, complex corrections, whatever. So the best idea here, because of these contracting trend lines, is probably a triangle. Wave A, B, C, D. Now we are in wave E. So it looks like that wave E could still reach lower prices. We could actually see wave E testing this lower trend line support. Okay, but just to focus on minimum expectations, I would love to see a test of this 2018 low, which was actually exactly from 1 year ago. So looking at lower time frame charts, well, I think that we may still see lower prices here. I will have to update this one. Firstly, I thought that this was a triangle. So actually what I'm looking at here is a flat correction for wave B. I really love flat formations that will form its structure after a 5-wave movement. So this was quite aggressive decline, wave A down. Okay, that it was a 5-wave movement, and then market moved to a new high in 3 waves. Then it fell into a new low, also in 3 waves. But what is really interesting, that it fell just for a few pips here. It reversed and recovered very quickly. So actually a lot of stop orders were cleared down there. There were stop orders placed from those who were long, right? And those positions were actually stopped out. And then you have a breakout traders who want to get involved in shorts and waited on this former low to be broken before they may look for even and trade on the downside. Of course, market and reverse, because both sides of the traders were cleared out. And actually something similar can be happening here right now. We are at the highs, okay, spike to a new high with this still increasing prices, but an overlapping formation. Okay, this is not sustainable bullish price action. It's something that typically suggests that bulls are struggling. Okay, and actually sooner or later they may give up, and once they give up, finally there will be a very sharp counter-trend reaction, and normally you will see the whole ending diagonal completely reversed in a very short period of time. So in my opinion, this can be a very nice flat correction here. We also, as I said, retested this old swing high here. Also there is a parity around that level, very strong psychological level. And if we go to the smaller time frame chart, what I really like is that also MACD made this, as you can see, this divergence, okay, despite higher prices. So we have a divergence, we have contracting wedge, we have this horizontal resistance, we have this parity, okay, psychological level. So in my opinion, I think that this dollar Swiss could actually continue lower. Of course, there is always chance that another high will be retested on the short-term side, and then we will see a reversal, but that would not change my view. I still think that this could be only a corrective price that is part of this wave E. Okay, now let's take a look on the next market, which will be, let me see what I have here. We covered Euro pound, we covered euro dollar. Okay. Okay, let's take a look at dollar against Mexican peso. Okay, so on a weekly chart, this is pretty clear. Okay, we have very strong decline, and then we have a sideways price action. And this sideways price action looks like just a pause that is part still of ongoing downtrend that started to unfold here from 2016 highs. I see it as a wave B triangle that can be finished because we can count 5 sideways: A, B, C, D, E. Okay. We also can see a failure attempt of a breakout here, the upper side of the range. So it looks like that in the short term, if we just focus on the minimum expectations, this lower trend line could be retested. Okay. Looking at the daily chart, what I really like is that this recent reversal is very strong. Okay, very sharp. So I think it actually represents part of a downtrend that will continue. Now if you look at the 4-hour chart, you can clearly see very nice 5 waves of decline and now a 3-wave rise. Okay, the first resistance that you would pay attention on is at 1960, and then you have a new one at 1975. Okay, so definitely watch out for these levels maybe to be retested, and then we get a reversal down from there. Also, what you could do is when you're trying to look where correction could occur, you just look at the past corrections, how long they were. And actually what I will do is just compare this wave 4 pullback, okay, and if something similar would form here, you can see that we could easily test this resistance. Maybe even some kind of a head and shoulders formation could form right there, and this is a neckline. Okay, now let's take a look on S&P 500 and DAX. Now the S&P 500 is bullish, but not so convincing if you ask me, at least on the short-term charts note. However, here we see prices in a 5th wave. We reached the first target, but obviously I want to stay with the trend. I want to expect more upside, so I'm even bullish here for this zone right there, which is still maybe 500 points away. However, on the shorter term charts, it's not really clear what is going on. Here we have this downtrend line, okay, that was broken there and now is retested. So I would not be surprised if we see another sharp drop from here, especially because current rise is in 3 waves right into this resistance. So maybe this wave 2 will be more complex than we think. However, I definitely in this case, since we don't have any confirmations on a lower time frame yet, I have to observe 2 different wave counts. The first wave count here on the right is that this 3-wave move that I just mentioned is already finished, and we'll see sharp decline next week. Okay, this count would be confirmed if we'll see this trend line connected from the start of a wave A and end of a wave B broken right there. Then this would set up a stage for a sharp drop into wave C, may probably retest August lows. On the other hand, if we'll just be chopping around here, still hold and trade well above this trend line, and once we will have enough of evidence that this is actually a correction, let's say that we will have a lot of 3-wave structures, a lot of contracting price action, overlaps, whatever, then I would say, okay, this is a correction because it's taking too long for bears to step in. So in such case, I would actually label this as a corrective wave 4 and would go with this count on the right, which actually suggests this could be wave 1, wave 2, extended wave 3, looking now for a wave 4, then break to a wave 5, to a new high, but then again a reversal down from a new high. Why I think that the reversal from a new high could occur is very simple. I'm looking at this concept of extensions. I'm using fib extensions of 23.6% of the previous decline, and you can see that here this was back at the start of 2018. Market actually rallied after this sharp decline, rallied for 123.6% before it topped and again reversed to the downside. Okay, then again I will look at this correction. Okay, it moved up right to 123.6% before it dropped. Now I will look at this correction. Okay, you can see here that 123.6 is higher, and then you have, I will label this recent correction, and wondering where 123.6 is coming in. You can see in a very similar zone right there. Okay, so I'm thinking that if we will stay above this trend line and just consolidate here, okay, and that we will have enough price action, price evidence that we are really in a wave 4, then I would look higher for a push into this zone, but as I said earlier, only temporary push to a new high and then a reversal again to the downside. Why? Because based on this, what I just showed on these fib extensions, market is obviously at such high levels that sellers will very quickly come in from higher prices, from all-time highs, or on the other hand, there are probably a lot of investors, buyers that want to take profits at the new highs, and that's why the market is coming lower. And traders, investors are very sensitive. Always when market is at new highs, they're looking for reasons why to get out, and even any negative impact on stock market is something dramatically that can globally happen, of course, will impact the investors' decisions, and those will look for reasons to get out of the market. That's why they will take profits and the market may come down. Okay, so watch out for these new highs here and potentially reversal lower. Okay, and now let's take a look also on DAX. Okay, so on DAX, clearly I'm expecting more upside. I'm bullish for wave 5, but here on the lower time frame charts, I'm not sure if we are going straight up from here. Why? Because this was a 5 waves of decline, and this could be easily still a 3 wave move, but sharp and deep wave B, here corrective move that belongs still into wave 2. So ideally we will see such price action. This could come in play also if S&P 500 will really turn down from that trend line resistance. If S&P 500 will break to a new high, then obviously I will have to adjust probably this wave count as well, and I would say that wave 2 has finished, wave 1 has finished here, wave 2 here, and this was actually a flat correction. So in such case I'll look for a pullback from a new high and then a continuation higher. Okay, but generally speaking, DAX is in uptrend and could and should resume to even higher prices, but after a pullback, in my opinion. Now let's take a look on gold. Now gold is approaching very critical levels here. We still have to always, when you see in media that gold has rallied 5%, 3%, is up maybe, I don't know, 10% this month, whatever, just go back and scale and look what is the price action, the pattern building on a higher time frame, because you never know where these prices are running to. Are we seeing any significant resistance in around the current levels, which I think it is a very interesting resistance area. We have still these 5 waves of decline, right, from 2011 highs, and now you have still only 3 waves of recovery into 61.8%. Then you have a wave A that can be similar in this into wave C around that prices, and then you have this previous swing high, swing lows. Okay, so everything comes here. You have to be open-minded. Let's say that resistance zone is around 100, maybe $150 here in the range. Okay, so I would not be surprised if we see a reversal down from here. There's also a chance that wave B has finished here and that this will be a 5-wave rise. Okay, but still, in such case, let me zoom this in. You would need this wave 4, probably even deeper, and in 3 waves. Okay, so I'm thinking that in the short term at least we could see lower prices, because on the 4-hour we came down out of this wedge and we came in 5 waves, and now we are, as I can see, just moving sideways, up, down, retested the lows a few times. Now we are back at the upper side of the range. So I'm looking at this as a correction that will send us lower, maybe into wave 3, maybe into wave C, but let's focus on this wave C. I still think that there is room for more weakness. Now silver is also very important, maybe even better, looking very structured here because of a sharp rise and sharp reversal. For me, that's an indication of a top. Clearly you can see it here. So I'm thinking that this is now consolidation and that we will see to the downside. corrections can always be complex or simple. It looks like this one is simple for wave 2 or wave B. Also, what is important is to look at the 10-year US notes. Okay, so looking at the 10-year US notes here, what I see is very nice reversal to the downside. Okay, and this reversal is impulsive. So even if this is just a wave 4, it should be made by 3 waves. So watch out for more weakness after this wave B bounce, which is already at some resistance on the short-term charts. So looking at this 4-hour chart, clearly 5 waves of decline, now 3-wave rally into this resistance. So if this market, okay, I will have to change this, if this market will actually really reverse to the downside, and for me that's a very clear structure, by the way, I think that gold will also decline. So let's compare it to gold to make sure. Okay, and I will actually move it to the downside, and you can actually see that top has been formed in a very similar date here at the start of September. Then this was a low formation. Okay, also gold retested the lows at the same time, and now this is a very deep rise here, but this is very slow. So if this 10-year US notes is going to see lower prices, then even here gold will see lower prices. Okay, so just 10-year US notes just give me just confirms what the silver and gold can be doing at the same time. Okay, and that this is a corrective rise within at least temporary downtrend, if not something more. Traders, thank you very much for your attention. I hope that you enjoyed this video. Talk to you soon. Bye.